Hi everyone, thank you for joining us tonight. It's great to have you here tonight. I'm James, a market strategist at uSMART Securities. I would like to welcome you to the Top Stocks with James series. Today, our main focus will be on Pinduoduo as we dive into the topic. Hey Alibaba, Pinduoduo is eating your lunch. As the title suggests, we think that Pinduoduo is growing at the expense of Alibaba. We believe that Pinduoduo is more worthwhile to invest than Alibaba. We are conducting this Talk Stock with James series every alternate Thursday, 7:30 p.m. The next one would be 6th of July. Again, I have not decided what company I will be discussing yet, but it will be either NVIDIA or Starbucks. So stay tuned for further update. We are also conducting a bi-weekly US options series where my colleague Kevin will be conducting the sessions. We encourage you to attend and show your support. Typically, we aim to run this options webinar every alternate Thursday. However, due to next Thursday being a public holiday, we will be conducting it on Wednesday instead. The basic schedule we follow is that if you see me conducting the webinar this Thursday, you can expect Kevin to be the speaker next Thursday. And we will continue this alternating pattern going forward. We will send you the webinar invite to your mailbox later. If you are interested in listening to the replay of this Pinduoduo webinar after it ends, or if you would like to access to our previous webinars, you can visit the Talk Stock with James channel on YouTube. I will be uploading the replay video maybe tomorrow. And please subscribe to our YouTube channel as well. Additionally, uSMART Securities will be participating in this year's Invest Fair organized by Share Investor. It will be a physical event. I'm glad to share that I will also be the speaker, one of the speakers at this event. And I look forward to seeing you there. Once all the details are finalized, I will share more information with you. And let me begin with disclaimer. First, this presentation is presented to you for education and sharing purpose only and does not constitute to any form of advice. Past performance is not indicative of future performance. Today, I would like to discuss Pinduoduo, the third largest e-commerce platform in China. While it may not be the largest because the title belongs to Alibaba, I believe that Pinduoduo is a more worthwhile investment than Alibaba. Allow me to take the next 20 minutes to explain my reason. Pinduoduo, known as Pinduoduo in Chinese, is an online marketplace that facilitates group buying. It enables users to form groups and purchase items together. By collaborating with others to buy a specific product on Pinduoduo, you can enjoy a discounted price. For instance, if a product is priced at 99 yuan, joining a group of people may reduce the price to just 49 yuan. You can think of Pinduoduo as a combination of many companies. The Pinduoduo app itself operates similar to Taobao, an e-commerce platform. Within the app, there are additional features such as 多多买菜 that focuses on group buying of fresh produce, much like 叮咚买菜 and 美团优选. Pinduoduo 直播 allows users to sell items through live streaming, a concept similar to platforms such as Douyin and Kuaishou. Furthermore, Pinduoduo overseas app Temu serves as an e-commerce platform targeting customers outside China, comparable to Amazon's international presence. I know some investors will think that Pinduoduo is probably trading at quite a steep price right now, considering the 2022 low was just $25 and now the share price has rebounded 186% to $73. But the all-time high in 2022 was $202. So the current share price at $73 still looks quite attractive, considering it is still about 63% lower than the all-time high itself. Okay, first of all, let's look at what makes Pinduoduo a good e-commerce platform. Why do some consumers prefer shopping on Pinduoduo over other e-commerce platforms? One main reason is that the items available on Pinduoduo offer better value for money. They are typically more affordable compared to other platforms, and they also provide a wide variety of options. Additionally, Pinduoduo frequently organizes flash sales and promotions, making their offering even more appealing. Furthermore, Pinduoduo emphasizes on social interactions, actively encouraging users to engage in group buying with their friends and family. This social aspect enhances the shopping experience, making it more engaging and enjoyable for many individuals. Firstly, let me explain why items on Pinduoduo are usually cheaper. Pinduoduo operates through a consumer to manufacturer model, C2M model, which is the ultimate version of cutting out the middleman. This model aims to eliminate all intermediaries. In contrast, traditional e-commerce players still involve multiple parties in the supply chain itself. A manufacturer produce goods and sell them to wholesaler, who then distribute the products to retailer, and this retailer then lists the items on the e-commerce platform to sell them to consumer. These are those traditional e-commerce player platform, how they operate. However, Pinduoduo's C2M model directly connects manufacturer with customers. This direct-to-customers approach eliminates the need for inventories, logistics, and distribution intermediaries. As a result, consumers can purchase high-quality products at ultra-low prices. Furthermore, Pinduoduo users can secure group discount on products by buying in bulk directly from manufacturer. This approach allows Pinduoduo to leverage economy of scale. By aggregating customer demand, Pinduoduo can negotiate better prices and terms with manufacturer, further reducing the cost itself. As a result, Pinduoduo can offer its user high-quality products at low prices. Another approach to maintaining affordable prices for items on the Pinduoduo platform is through subsidizing the merchant's products. In 2019, Pinduoduo introduced a 10 billion yuan subsidy program, which served as an incentive for merchants to list their products on Pinduoduo platform and attracted many customers to make purchases through the platform. Moreover, in a recent quarterly earnings call in May 2023, Pinduoduo announced the launch of another 10 billion ecosystem initiative. This move was partially motivated by the fact that JD.com, one of their competitors, had also launched a 10 billion subsidy program in an attempt to gain a larger market share. So how cheap is the products, is the items listed on Pinduoduo? For example, if you visit the Amazon platform, you will notice that the Nintendo Switch OLED is selling at 419 Sing dollars. In comparison, the same Nintendo Switch is available for $348 on Pinduoduo, $387 on Taobao, and $391 on JD.com. These comparisons show you that the products on Pinduoduo are generally more affordable. Pinduoduo is a social e-commerce platform that offers a unique and engaging shopping experience. When you visit the platform to make a purchase, you will quickly realize that it's more cost-effective to engage in group buying. So this encourages users to invite friends and family on popular social media platforms like WeChat or QQ to form group and make purchases together, thereby enjoying the discounted items as a collective. Let's take an electric screwdriver as an example. It's priced at 69 yuan if you buy it yourself now. However, if you initiate a team purchase, a group purchase, and encourage friends to via social media to join your team, or you can also join an existing team purchase, you can buy the screwdriver for just 29 yuan. Another unique social element of Pinduoduo is the price chop features. Price chop 砍一刀 allows users to obtain certain products for free by sharing a custom link with their friends, which encourage existing users to ask friends to download the app and click on the link to drive the discount. If the discount reaches 0 within 24 hours, the person who shared the link receives the item for free. So it's unsurprising to see that the monthly active user for Pinduoduo is one of the highest among China tech companies. For instance, Alibaba has approximately 1 billion active users in China. JD.com has around 600 million. Pinduoduo has around 900 million active users. Considering Taobao was launched in 2003 and Pinduoduo only entered the market in 2015, it is remarkable to see Pinduoduo has quickly emerged as one of the fastest growing platforms in China. Pinduoduo has been successful in attracting active users from platforms like Alibaba due to the China government's crackdown on the choose one from two practice. Previously, merchants were only allowed to select one e-commerce platform to list their products, and Alibaba's strong moats was mainly built on network effects. With the choose one from two rules in place, most merchants naturally chose Alibaba since it had the largest customer base itself. This was especially true for brand stores. They normally will choose Alibaba. As a result, consumers previously preferred to shop on Alibaba's platform. However, since the China government decided to stop the choose one from two practice, it has contributed to the success of Pinduoduo. Merchants now are no longer limited to a single platform and can now redirect customers to other e-commerce platforms with lower commissions, which is Pinduoduo. It's now natural for merchants to list their products on Pinduoduo since Pinduoduo takes a lesser cut in transactions. Pinduoduo also offers subsidies, lower advertising costs, and group purchase discount, leading to lower prices for most products compared to Alibaba. This results in gradual shift of customers from Alibaba to Pinduoduo. As a result, merchants are inclined to list their products on Pinduoduo. Having said that, if you want to invest in one Chinese e-commerce companies among Alibaba, JD.com, and Pinduoduo, my preferred choice would be Pinduoduo. Another contributing factor to Pinduoduo's high monthly active user is its focus on customers on lower tier cities. Although the asset market breakdown is not officially disclosed, it's estimated that Alibaba and JD.com generate a significant portion of their GMV from customers in tier 1 and tier 2 cities. In contrast, Pinduoduo's revenue comes mostly from Tier 3 and Tier 4 cities and below. For example, it's estimated that Pinduoduo generates 59% of their GMV from Tier 3, 4 cities and below. One reason for this distinction is the perception that customers in Tier 1 and Tier 2 cities who are generally relatively wealthier prefer to buy expensive and genuine products from platforms like Taobao rather than Pinduoduo, because it's commonly believed that Alibaba ensures stricter regulations and quality control to guarantee genuine products, as demonstrated by Alibaba's fight against counterfeit products in the past. On the other hand, Pinduoduo is often seen as more lenient or loose when it comes to onboarding merchants. So Alibaba's Taobao is dedicated to stop counterfeit products. However, there is still a demand from customers who simply cannot afford expensive, genuine products. So these customers turn to Pinduoduo to buy items that fit within their budget, as they simply cannot afford pricier items on Taobao. Let's spend some time to look at the competitive landscape in order to understand how Pinduoduo is performing. Firstly, there are three key players in the Chinese e-commerce landscape: Alibaba, JD.com, and Pinduoduo. Alibaba holds the position of market leader with a market share of 47%, followed by JD.com 17%. Pinduoduo, despite being a latecomer in the Chinese e-commerce space, has managed to secure a market share of 13% as of now. But growth investors prefer Pinduoduo because of the rapid growth and its ability to gain market share from the established incumbents itself. In the e-commerce space, it's important to understand the distinction between first-party 1P and third-party 3P model. Basically, first-party refers to the e-commerce platform itself, such as JD.com, directly purchases and owns inventory. First-party player is also responsible for storage, packaging, and shipping. Platforms like JD.com normally own numerous fulfillment centers and have strong logistic infrastructure, enabling them to deliver goods fast, quickly. Another advantage of the first-party model for the e-commerce platform is the ability to have full control over inventory. For example, companies like JD.com can choose to buy a wide variety of goods and making them all available to customers. Additionally, they can exercise better control over the product quality, and customers prefer purchasing expensive products from first-party player, as they have confidence that the goods are genuine and not some counterfeits. However, the major downside of the first-party model is that typically it operates on low profit margins. Another downside is first-party is an asset-heavy business model. A third-party business model involves onboarding many merchants to list their products on an e-commerce platform, and these merchants own and manage their inventories while setting the prices for their products. A platform like Pinduoduo charges merchants commission for facilitating transactions. Additionally, merchants may pay marketing or so-called advertising fees to secure priority listing and increase traffic on the Pinduoduo platform. As a result, this model is known for its high profit margin. Because on top of the transaction fee, you are charging the merchants the advertising fees itself. However, the downside is that platforms often prioritize onboarding as many merchants as possible, leading to a loose onboarding process This can result in counterfeit products being sold on Pinduoduo. Additionally, some third-party player like Pinduoduo does not have their own logistic infrastructure, leading to longer delivery time. Both business model, first party and third party, have their advantages and disadvantages. The most successful e-commerce player in the world, Amazon, operates both a first-party model and third-party model. However, it's undeniable that third-party revenue has been growing faster than first-party model in recent years, enjoying a higher profit margins as well. This has led some investors to urge Amazon to let go of the first-party model and focus solely on the third-party model itself. Personally, I believe that third-party business model represent the future of e-commerce. Pinduoduo previously had some first-party business, but has completely phased it out, and now solely focus on third-party. JD.com initially started with a first-party model and slowly expanding to third-party. Alibaba is peculiar, as recent quarterly earnings indicate that it has slower growth in first-party it has slower growth in the third-party business model compared to first-party. Nevertheless, Pinduoduo third-party model is thriving with revenue growth of 39% compared to last year, outpacing other players in the industry itself. And previously, Pinduoduo's e-commerce revenue accounts for 10% of Alibaba e-commerce revenue in 2020, but by 2022, it has increased to 20%. Another indication that the third-party model is potentially a better strategy can be observed by looking at the GMV number itself. Pinduoduo GMV is showing rapid growth of 39% this year, outpacing other players again. Initially, Pinduoduo's GMV was 20% of the size of Alibaba's GMV in 2020. Based on my estimations in 2022, it has now increased to approximately 38% of Alibaba's. And Alibaba still holds the largest third-party revenue among all players itself. The size of Pinduoduo third-party business was 17% of Alibaba's third-party revenue in 2020. In 2021, it increased to 27%, and by 2022, it further rose to 45%. These figures indicate that Pinduoduo is attracting merchants away from other platforms, and merchants are more willing to advertise on Pinduoduo compared to other platforms. And this is the most one of the most important slides, as it shows you the advertising revenue of China tech stocks itself. So Pinduoduo advertising revenue is now larger than Baidu, Kuaishou, JD.com, Tencent, indicating that Pinduoduo is one of the leading advertisers in China. Let us look at the financial statement itself. The year-on-year revenue growth for Pinduoduo was 97% in 2020, and 58% in 2021, and 38% in 2022. Although the growth rate has been declining, it remains one of the best among China's tech stocks. Moreover, Pinduoduo has been consistently profitable since 2021, as evidenced by its positive operating income itself. In the most recent quarterly earnings report, Pinduoduo recorded a year-on-year revenue growth of 58%, and the operating income has increased by 221%. This result indicate that there are no signs of a slowdown for Pinduoduo yet. And let's look at the profit margin. the gross margin looked healthy at 70% in the latest quarter. Operating margin was 18%. We may start to see the operating margin comes down due to its aggressive overseas expansion itself. There are three key components in the revenue. Firstly, merchandise sales is the first party model revenue that Pinduoduo buys directly from supplier and sells directly to customers. Transaction service revenue is the commission Pinduoduo charges on merchants to facilitate transactions. And lastly, online marketing services is the advertising revenue. So these two revenue belong to the third-party model revenue. There are a few key takeaways when looking at the revenue breakdown. Firstly, Pinduoduo is closing down the merchandise business. Is closing down the first-party business. We can see that the merchandise sales is 0 in the latest quarter. Secondly, the revenue generated from online marketing services contributed to about 70 to 80% of Pinduoduo total revenue. However, the year-on-year growth itself in this segment has slowed down to 41%. Nevertheless, this is still okay, considering Pinduoduo's advertising revenue remains one of the highest among all China's tech companies itself. Thirdly, the transaction service revenue currently accounts for about 21% of Pinduoduo total revenue. Although it's experiencing a year-on-year growth of 95%, it significantly lags behind Alibaba in this aspect. For instance, Alibaba's take rate, which represents the percentage of revenue earned from transaction, is around 7 to 8%. In comparison, Pinduoduo take rate ranges from approximately 1 to 3%. To put it simply, Pinduoduo business model makes it difficult to charge a higher take rate because the item listed on Pinduoduo is already selling at a very low prices. However, Pinduoduo deliberately avoids increasing the take rate because its main objective is to attract as many merchants as possible. The rationale behind this is that a greater number of merchants leads to more customers, which in turn attracts even more merchants. To achieve this, Pinduoduo launched the 10 billion yuan subsidy program to subsidize merchants' products, enticing them to list their products on the platform. In summary, Pinduoduo's business model is to onboard as many merchants on the platform as possible. What Pinduoduo really cares about is the advertising revenue. The advertising revenue, as I mentioned earlier, accounts for 70 to 80% of the total revenue. Pinduoduo wants merchants to spend on advertising to gain user attention. Pinduoduo also launched its overseas version of the app in the US in August last year. It's called Temu. The app is now available in Canada, Australia, and New Zealand, as well as France, Germany, Italy, the Netherlands, Spain, and the United Kingdom. The main idea here is to sell Chinese products to overseas customers. If I were staying in the US right now, I would imagine that the products listed on Temu are too cheap to resist, especially since the delivery is now free. So even though the delivery time is longer, around 7 to 15 days, compared to Amazon delivery time of under 2 hours, it might still be worth it to order things from Temu itself. I believe one of the key reasons why Temu is selling products so cheaply to US customers is because Pinduoduo is subsidizing them. However, it remains to be seen how long Pinduoduo can sustain this subsidy program overseas. Another aspect which I don't quite like is Temu expanding into too many countries. Overexpansion often results in a significant cash burn. However, who am I to say that the overexpansion won't work? I mean, if Shein can succeed in so many countries, why not Temu? And let's talk about Pinduoduo past performance. It has a very volatile performance. It achieved remarkable 68% return in 2019 and an impressive 369% return in 2020. However, it experienced decline of 67% in 2021, followed by a positive 39% last year itself. So considering the year-to-date return of negative 10%, this is quite an unusual quiet year so far for Pinduoduo. Nevertheless, the key takeaways here is looking at the performance in 2022 and 2023, Pinduoduo outperformed all other Chinese technology companies, namely A, T, M, X, J. However, it underperformed US tech stocks like Amazon or Apple this year itself. The maximum drawdown and standard deviation over the past 4 years for Pinduoduo were negative 89% and 77% respectively. This indicates that Pinduoduo is the most volatile stocks compared to other companies and indices in this list itself. However, despite the volatility, Pinduoduo has achieved a favorable 4-year annualized returns of 36%, making it the best among Chinese tech stocks and one of the top performers among US technology companies. When comparing Pinduoduo and Apple, it's worth noting that Apple has outperformed Pinduoduo in terms of the 4-year annualized return at 39%. Additionally, Apple is less volatile with a maximum drawdown of just negative 35% and standard deviation of 34%. The key message I want to convey here is that there are many excellent US technology companies such as Apple. For growth investors, it is advisable to first construct a portfolio consisting of US technology companies. Once you have accumulated enough US tech stocks, you can then consider exploring Chinese technology companies. Among the e-commerce players, including Alibaba, JD.com, and Pinduoduo, Pinduoduo is my preferred choice. However, when considering other China tech stocks, Pinduoduo would likely rank number 3 in my preference. My ranking is as follows: Tencent, followed by Meituan, and then Pinduoduo. Let's talk about valuations. We use DCF model to derive a fair value of $124 for Pinduoduo share. So if you compare it to yesterday's closing price at $73, it represents an upside potential of 69%. Some assumptions I make include a WACC of 12% and for Pinduoduo and a terminal growth rate of 3%. In comparison, the 12-month target price according to Bloomberg consensus is $105, an upside potential of 44%. And let me go through the technical analysis very quickly for your entry strategy itself. Firstly, you could probably wait until the share price fall to the lower trend line here of this uptrend, of this uptrend channel, the current share price is trading at $73. The lower line here is about $69. Secondly, the share price is now below the 200 days moving average. You may wait until the share price crosses above 200-day moving average again, then you enter. The moving average is now trading at around $75.36. And I shall end my presentation here. Please subscribe to my channel, Talk Stock with James, and I will be uploading this webinar in the next few days. And let's now proceed to the Q&A sessions. Please type your question in the Q&A box, and I will try to answer all of your questions. Okay, first question, what is a good entry price for S&P 500 ETF? Like SPY ETF. Okay, I think that the basics for S&P 500 to continue to go higher is quite weak as of now. This is why I am not really that bullish in shorter term. I would say that if you already own some S&P 500 ETF like SPY, probably now is not the right time to enter. You should probably wait for more corrections, some corrections like 4,000 to 4,100 for S&P 500 index. Then you look back at the ETF itself. So personally, I want the index to drop to 3,600, but it may seem unlikely for now. So why I think the upside could be limited for S&P 500 is because previously market push up S&P 500 index as market participants believe that FOMC will reach the terminal rate soon at maybe 5 to 5.25%. But now we all may see at least 2 rate hikes by the end of the year itself. So the latest projection by CME Fed Watch is that FOMC will raise 25 basis points in July and will not cut rate this year. The problem here is higher rates for longer narrative is bad, but no one cares. So I think either investors don't believe the Fed member will stay that hawkish, or they simply believe that the earnings will save them. So true enough that the earnings are better than expectation in the first quarter this year. But when the second quarter earnings release in July, we shall see whether it still beat the expectations itself. If it continue to beat the expectation, probably I will give out my short-term bearish view and turn bullish ultimately. What is the impact of Alibaba changing CEO? Okay, I believe Alibaba was down when they announced, and probably Alibaba is also down yesterday, or maybe just move out slightly, I can't remember. So it naturally doesn't look really good when a company changes CEO, especially there are not a lot of publicly available information about the new CEO, Wu Yongming. I only know that he is one of the co-founders, he is one of the 18罗汉. In short, the news itself is short-term bearish. In longer term, it is a good news. Why do I say so? Because it actually shows the investor that Alibaba's determinations to quickly change things to survive in the e-commerce space. And if you have listened to my Alibaba's webinar, I think last month or 2 months ago, I say that I don't think that the previous CEO is a good CEO compared to Jack Ma. And just a wild guess, I reckon Alibaba will launch a 10 billion subsidy program soon. I mean, since JD.com and Pinduoduo are already doing so, it does not make sense to me that Alibaba does not follow suit. So I would say that probably Alibaba does not launch the 10 billion subsidy program yet because it's waiting for the new CEO. So it could be positive when they announce, if they announce. All in all, I personally don't quite like Alibaba. I maintain my neutral view. All I like to say is 留给阿里巴巴的时间不多了，真的不多了。Okay, next questions. Which one do you think that has better growth opportunities, Meituan or Pinduoduo? Okay, again, it's a good question. Thank you for asking. I think both have really good growth opportunities, but since Pinduoduo is doing a lot of overseas expansion now, so the revenue growth may surprise all of us. And Meituan only ventured into Hong Kong lately, which is still part of China. So I would say that the growth opportunity for Pinduoduo is better. But Meituan should be the market leader in China local life service space now, which is an exciting space to be in. So I would say that the growth opportunities is also quite huge for Meituan. Just continue to try and grab more market share in China. My understanding is Pinduoduo is not the market leader in many space, not just in e-commerce. It is probably the market leader in group buying, fresh produce, and probably that's it. All in all, the better answer I have for you here is, even though Pinduoduo has higher growth opportunities due to the overseas expansion, Meituan is probably a better investment as of now, as I prefer market leader. Okay, I think I answered all the questions. Thank you all, and I shall see you in 2 weeks' time. Thank you.